Welcome to Crypto Sage, helping people to make money out of crypto. Today let's look at the reason why Biden's SEC chair could increase the adoption of cryptocurrency. Come on. Before that, please make sure to subscribe and click the bell icon below. Despite dips in value and articles claiming Bitcoin is dead, it finished 2020 strong. The world's highest valued cryptocurrency almost tripled its value in 1 year. Waves of private investments has helped bolster the cryptocurrency's run. Larger financial institutions like JP Morgan Chase also created their own digital currency. Despite this, it may take more than 2021 for other institutions to buy into Bitcoin. Cryptocurrencies like Bitcoin are decentralized from banks. When depositing money with a financial institution, you entrust them to hold it. With Bitcoin, you are responsible for tracking and securing the assets yourself. Otherwise, you entrust your digital assets to an exchange which is likely unregulated. Biden is set to announce a new lead for the U.S. Securities and Exchanges Commissions soon. Gary Gensler will likely be tapped for this position. He is uniquely qualified for this position. Gensler served as the former chairman of the Commodity Futures Trading Commission. He taught digital currency and blockchain at the MIT Sloan School of Management. He's testified about cryptocurrencies in the past, before Congress. Gensler's future legislation could diminish the risks of trading these digital assets. ICOs. The lack of regulation harms people trading and holding cryptocurrency. Many exchanges remain unregulated and new coin offerings are popping up every day. If a new company aims to fund their blockchain endeavor, they often release a unique token. Buying these tokens through the initial coin offering funds the system itself. Fraudulent scams may lack transparency or provide false data about their funding. The premise and volatility of blockchain makes initial coin offering tantalizing. The lack of regulation helps entice scammers. Unlike investing in stocks for an initial public offering, there aren't any regulations. Taking the helm of the SEC, Gensler could introduce protections against such offerings. It could also provide clarity to a recent SEC lawsuit which tanked the value of the XRP cryptocurrency. There is currently no regulatory body overseeing ICOs. Regulators must pave clearer paths for blockchain companies. Additionally, it is still unclear when a digital asset becomes a security. Since the initiator of the XRP lawsuit has departed the SEC, Gensler may be a key decider in this case. From his talk, it's clear that Gensler believes in some form of SEC regulation for individual cryptocurrencies. Addressing these policy gaps could make digital currencies safer, increasing their adoption. The safety of exchanges. Bitcoin and other tokens, purchased through online exchanges, are vulnerable to manipulative activity. It is often difficult to discern whether an exchange is legitimate or not. There is also the compounding issue of security and hacks that add to the volatility and risk of these assets. As a result, many veteran traders use hardware wallets to store their tokens. Inevitably, hardware may get thrown out or you may forget the password. Stephen Thomas forgot the password to his wallet. He has 2 guesses left until he locks himself out $300 million in Bitcoin forever. A reasonable middle ground could protect consumers from losing their digital assets. Creating laws and regulations for these exchanges could mitigate their risk. Gensler recognizes the precarious nature of many crypto exchanges. For most cryptocurrencies, 95 to 98% of all activity is happening on crypto exchanges, not on blockchain itself. There is a lot of manipulative activity. Gensler will probably pursue some form of regulation for these exchanges. This also opens the door to Bitcoin Exchange Trade Funds, ETF, that could also curb trading on risky exchanges. Though such an ETF may be a future inevitability, it is unlikely to become an immediate priority. It is unclear what 2021 has in store for Bitcoin and other cryptocurrencies. The upcoming appointment of Gensler as an SEC chair could be positive for digital assets. Gensler is uniquely qualified to bring in sensible regulation for trading cryptocurrency. He has introduced major reform in the past, as the former chair of the Commodity Futures Trading Commission. Gensler himself is optimistic about Bitcoin and other digital currencies. I look forward to seeing how he will update the SEC to deal with cryptocurrency.